Good afternoon, Fabio Ronetti for Winston Capital Advisors, and this is my last transmission from Miami. We're going back to New York tomorrow after spending 2 beautiful weeks in Great Miami with friends and family at the Langford Hotel, which I highly recommend it if you ever have to work downtown. It's a great facility that it was really hospitable to the team of Winston Capital. We're going to cover the week of May 14 to the 18th, and these are the topics. We're going to talk, there's a lot of geopolitics in this week. The China mission, North Korea, elections in Venezuela, NAFTA. We have Italy new government, which we think has implications, further implications for the rest of Europe. Then we're going to talk about the markets. The big name or the big protagonist of the market was the US dollar, kicking ass to everybody by the hand of the long bond. We had the Argentina Super Tuesday, and we're going to jump right now into Barron's. There's 2 great articles that I highly recommend from Barron's. There is one sort of doing a mea culpa on President Trump. Since President Trump got into power, the market is up 29%. Since Dwight Eisenhower, no president in the United States has that record. And the article does a good mea culpa analysis of, how people don't like him and were much against what he was doing. But however, a lot of the achievements have been reflected in the market: better growth, taxes, deregulation, and some of the fights on this tariff front. So highly recommended to read. The second article is an interview with Larry Kudlow, the chief economic advisor of President Trump, someone that he was, a very well-known commentator in CNBC. I like him a lot. I think that he's a very good man, and he speaks very candidly about his views, his relationship with President Trump. He's a supply-side economist. He worked under President Reagan, so also a very highly recommendable reading on these 2 Barron's articles. Let's jump quickly into the agenda. So on Tuesday, we have Liu He, Vice Premier of China, arriving to Washington, D.C. to try to shrink these differences with the United States on the trade balance. There was a lot of conversations, even a meeting with President Trump, and then on Friday morning it was announced that the Chinese were ready to commit to shrink that gap by $200 billion. Then it was kind of controversial. No, we didn't say that. We say that. Today, Saturday, the White House says, no, there was a miscommunication. It's not the case. However, I believe that both sides are very optimistic in trying to close the gap, trying to work together. So we in Winston Capital believe that we're going to get something positive out of that. Same with North Korea. I jump into that. North Korea, threatened to suspend the negotiations if there were certain military exercises done by South Korea, which by the end of the week, the United States suspended them, understood the issue. Also some comparisons between North Korea and Libya. Remember, the dictator there eventually was killed. So, there were some fears of that, which President Trump personally addressed. I said, that's not going to happen. So I think it's part of the story, it's part of the negotiation. Also, we're very optimistic on the North Korea situation. Now, when we're not optimistic is in the Venezuela elections. We have elections on Friday. It's not a free elections, it's a fraud. President Maduro will win. And the thing is, what happens after the election, Monday or Tuesday? We are very sure that the United States will put very, bigger and stricter sanctions on that, which will keep the price of oil moving higher eventually. It's been a big rally on oil. We're getting into the driving season in the Northern Hemisphere. So, oil is close to 80, and also we have the lingering or the coming Iran sanctions very soon. So we're looking into what might happen there. We missed that rally in the XLE, XOP, USO ETFs, which are, the dollar link or the energy link. We think it's too late. They are in the all-time highs in the sector, which is doing the best year to date, almost up 10%, more than 10%, I'm sorry. But we think it's too late to jump for now. We will see. However, we're getting tighter supply. Even without sanctions, Venezuela is self-destroying themselves. ConocoPhillips is being successful in grabbing assets from the company in the Caribbean islands, and then the Iran sanctions will kick in. And again, we don't know yet if and how the sanctions on Venezuela will be. But we missed that rally, so we'll wait. Our technical analyst says it's now very risky. We're in uncharted waters. We would like for that to consolidate a little bit before putting some money to work in that sector. Italy got a new government, and although they don't have a prime minister, they got a new government which the whole consensus or political platform is very populist. They want less taxes. They want to relax some of the budget constraints. They are thinking of putting more restrictions on the banking system, especially when it comes to individual investors, and the like. Even an universal income for everybody. And remember, Italy, the third largest economy in Europe, their GDP per capita has been stagnant for almost 20 years. Well, the other countries went through the crisis and recovered, Portugal, Spain, and everybody. Italy has been stagnant. And I think one of the comments by the leaders that won the coalition, I think reflects the mood. The guy says, we need more work, less illegals, more security and less taxes. I think that reflects a lot what a lot of people are thinking in a lot of the democracies in the world, not just in the developed world, but also you have it in Latin America. They want more jobs. They are very concerned about the illegals because they steal legal jobs. They don't pay taxes, so it's an unfair competition. They are a big part of the security problems in many countries. They're the victims of this insecurity, and sometimes they are the perpetrators. And also they create a big burden for the state because they get a lot of social services and they don't pay the taxes. So I think this is something that's here to stay, and people are, concerned about austerity measures and all that. So again, it's something that we will be watched closely. The Italian stock market, which was the best year today, up 10%, lost 5%, half of the gains mainly led by the banks. Also, the bond markets in Italy took a big pounding, thinking that a country that already has the highest debt to GDP of the big countries, together with Japan, it will still be doing more fiscal deficit. So again, not to invest, but clearly to follow on what it means. So, but since we're talking to bonds, the big name last week was the dollar. It kicked ass to everybody, strong and weak, good and bad. 2 to 3% rally or more against the big currency, the G3 or G7 currencies, and in the case of the emerging markets, 5 to 10% rallies. Things like the Mexican peso down 4%, same with Brazil real, even the Uruguayan peso, and obviously the Argentine peso down 10%. Why the rally? Long bonds at 3.10% yield, short bonds at 2.50. So, and most economists are seeing a reacceleration of the economy in the second quarter. And although inflation is not growing, it's steady moving in the right direction. And the Fed has indicated that they will keep steady raising rates. They want to normalize rates. So we have, a big differential now. Europe is growing okay, and still there is disinflation. So this differential is becoming bigger. So no one thinks the European Central Bank will act anytime soon. And in the meantime, you get 2.5% yield short term in the United States. So that was big. The markets didn't do much in general. The emerging markets went down with the exception of Russia that went up because of the oil. But the equity markets went down 3-4%, Argentina 5%, and the markets here were steady. The big name was the dollar and the rates, which we will keep looking in the coming weeks. Let's go to Argentina. They had Super Tuesday. The local treasury bills expired on Tuesday, close to 30 billion. Big, 100% of them were renewed, and also there was some new issue to some Franklin Templeton and BlackRock, or Blackstone, I don't remember, for 2 billion. So that was positive. The peso, that was down 20% in the last 3 weeks, went from 25 to 24, but then slowly start creeping back to 25. What we think in Argentina, wait. We sold, we took our humble pie, and we sold our positions that we had in equity, and we want to wait what Argentina will promise the IMF, what they get in exchange. And after we get that, and we see how realistic it is from the point of view of the promise and the delivery of what the IMF is asking, we will make our new decision. So we'll wait for now story. And at the end of the week, President Trump spoke with President Macri. He tweeted, so everybody knew before the press that they had a conversation. And President Trump came giving his big support to President Macri on the changes that he's trying to do, the structural changes, etc. And then President Macri properly answered with a tweet that they had a conversation, and he was very happy. His story to follow, and we'll be keeping you. That's all I have. I hope you have a great week. Again, for our subscribers, we'll get every day at 9 o'clock. And if you're not a subscriber, you can check us out on winston.capital. Everybody, have a great week, and we will start reconnecting again from New York on Monday. Have a great one.